But let's deep dive into this space now. We have Param Desai, who's a research analyst at Prabhudas, Lilladher, who joins in to give us his view. Param, hi, good morning, and thanks for joining us. You know, there is an EBITDA growth or a margin operational improvement that we're expecting for the sector this time around, largely led by a good domestic growth, and you know, across the board also perhaps pricing pressure has eased a bit. But you tell us your recommendations on this space and which are the stocks that you like?
Yeah, good morning. There is an expectation that the prices have bottomed out in the US market, and this is in our assessment partly also due to the expectation that there has been an increased FDA scrutiny in the on the various plants, which has resulted in various warning letter and import to the multiple generic guys. So buyers in the US are largely looking for an assured supply rather than the lower pricing. So that's one of the reasons which will partly benefit to some of the guys which where the plants are largely FDA compliant. So from a Q4 perspective, yes, due to the steady domestic growth, there has been reasonably good new launches like Revlimid, which will aid the EBITDA growth on a YOY basis. Plus, there has been INR weakness of around 10% YOY, which would also aid the EBITDA growth of to around 20% for our coverage areas in the Q4.
All right. Hi, good morning, Param. Param, a few of these stocks, they got completely bombed out and now they're recovering. To name a few, Divi's Laboratory, Gland Pharma, as well as Pyramid Pharma. From the top, they've seen a sharp correction. Now, if I just plot the margin chart as well, the margins have got compressed. The hope is that things start turning around from here. Your view on any of these three companies, and do you believe that margins will improve? If yes, to what levels?
Yeah, so we covered Divi's, so I will be able to comment on that stock. So Q3 Divi's result had taken a sharp hit on the margin side, largely due to the lower margin contribution from their CDMO business, and also due to the high raw material price inflation. In our assessment, the gross margins, what Divi's have reported around 56-50, that was the lowest since FY12. We would not extrapolate to that, as some of the things have started easing down, and specifically on the raw material side. So the benefit of that will be start getting visible from the Q4. So we do believe that there will be sequential improvement in the names like Divi's. Along with that, they are coming up with a high COVID base. So now I think the last 2 quarters also, I think the numbers are largely reflect their base business, and they have a reasonably good pipeline on the CDMO as well as on the generic API side. So there will be a sequential improvement in the names like Divi's from here on.
Okay, sequential improvement in names like Divi's. Got that. I wanted your thoughts also on a couple of these hospital companies, the likes of Apollo Hospitals. You have a buy on that. There's, of course, lots happening here with the expectation of the deal coming through as well. But you tell us, how will the growth look this time around? There has been a lot of competition in this space too. Are you expecting any EPS upgrades here? And on Apollo particularly, what are the triggers?
Right. So Q4 generally seasonally is a strong quarter for the hospital companies. There will be some sequential improvement in the occupancy across the hospital names, which will be reflected even in case of Apollo. Apollo X of 24/7, largely they should continue to compound by 15-17% EBITDA growth story. If you see, Apollo has still not reached to its optimum occupancy utilization level. They are, for the first 9 months, they are at around 65-66% occupancy. Prior to COVID, they were at around 70% kind of occupancy level. So they have still room to scale up their utilization level. Plus the kind of cash flow they are being generating, they are in a very good position to do brownfield or any inorganic opportunities which come across them. So they are also adding some 2,000 beds in the next 3 years on a base of around 8,000 operating beds. So that's a 25% capacity addition they are likely to do. That's on the hospital side. On the pharmacy side, they are also on the offline pharmacy, they are adding 700 to 800 stores. And last 2-3 years, we are clearly seeing that the organized market share has been ramping up and in the retail pharmacy. So that will benefit the players like Apollo Hospital. So that keeps us positive on the stock. The key thing to watch out will be the investments in the 24/7. On the stake sale, yes, there has been some delay in the stake sale as the market was not conducive. But over there, what we are seeing is the discounting factor is largely been getting stabilized, and more or less, I think the losses, what they are reporting is largely picked out. and from FY24, I think the losses should come off on the 24/7. I think that is one of the key re-rating candidate in the stock.
Okay, all right, Param. It's good hearing your thoughts. Thanks so much for stopping by and filling us in with your inputs, both on the pharma stocks as well as on the hospital space. But it's almost 9:10, so let's